Hi everybody and welcome to the PlantStock channel. My name is Jesse if we haven't met yet. Today I thought I would just bring you a short video to give you some insight on what is going on with Oatly. As you might have noticed, Oatly has actually gone down quite harsh as of late, about 30%. Now obviously there are several reasons for this, and one of the reasons is that the Fed still haven't been clear on what is happening on the market. They still seem to be uncertain themselves, and there's still uncertainties regarding interest rates. And when it comes to the inflation, how heavy it's going to be. And as we know, it might actually be quite heavy when it comes to food and beverage stocks like Oatly. But just recently, an investment firm actually came out with a 120-page short report on the company where they're actually quite negative regarding the whole company, right? So we're going to take a look at what these short sellers are actually claiming to be an issue with Oatly and why they are heavily short selling now the company. When I have time, I might go into this a bit deeper, but you should know they are short selling this stock, right? And there's a reason for that, because they want to make money. As we know, many of these firms aren't afraid to kind of distort the truth at times. Again, just to reach their goals. If you haven't seen my videos on how hedge funds handle the truth when it comes to reaching their goal, take a look up in the right corner. So again, when you watch this video now, remember this constantly. Why are they doing this report? Are there reasons behind it? Is it only to get that news out there, or is it because they actually want to make a lot of money? Now, I'm not stating that what they're saying isn't true or there aren't several parts there that might be true. I have too little information, to be honest. But I just want you to keep in mind, when it has to do with money, that's always something you have to consider, right? But before I let you continue with this video now, I would surely appreciate, as always, an early thumbs up to help spread the video to more people out there. And if you haven't subscribed to this channel yet and you are interested in companies like Oatly, Tattoo Chef, Beyond Meat, the Very Good Food Company, to name a few, make sure to subscribe and don't forget that magical bell button. Thank you, folks. I truly appreciate your help.
Well, Oatly is a very highly promoted and marketed company. You see their billboards all over New York City on city buses, but when you try to go find the product, it's not on the shelves. And the company would love you to believe that it's in high demand, but we think they actually have a supply problem. And we think they've had a supply problem for a long time in their manufacturing process. And they've tried to spun the narrative that they're successful because they're having challenges, supplying the market. So, the impetus is to do a deep dive to really understand what's going on beneath the surface here. This is a $12 billion market cap company that's losing a lot of money, that's been highly promoted. And we think there's a lot of problems under the surface that we've uncovered through employee interviews, freedom of information requests, and a close review of the financial statements.
Ben, it's Julia LaRoche here, and I know you as someone who takes that forensic detective-like approach to your short theses. You're saying this was kind of the impetus for you to look deeper at the company, and you mentioned the FOIA requests and the interviews. Let's hone in on the financials here and the concerns as it relates to the financials, and what did you find as it relates to their reporting and their revenues and their margins?
That's a great question, Julia. So let's start off with the financial statements. The company's been audited by 3 auditors in 6 years. That's a red flag. That wasn't disclosed in the SEC filings. They've reported historically in Sweden and the UK, so we have the old records. Let's look at the revenue. The company just put up their June investor presentation on their website, and they made a modification to a key slide where they now footnoted that their production is estimated. Well, if your production is now estimated, then how can we have any reliance on the revenue? Because production drives revenue. And when we dug deeper into the revenue, we see that they failed to disclose numerous aspects of the revenue components, whether it be FX, whether it be average selling price, incentives and discounts. We know they're heavily doing that to get stock, to gain distribution. So just on the top line of the revenue, we have an issue. In 2018, they're reporting US revenues were $12 million. We interviewed someone very knowledgeable that was there during the time and came away with the revenues were actually 48 million. So we think there's evidence of overstatement of revenues, and we're seeing receivables growing faster than revenues. That's a huge red flag. So top line revenues, we have serious problems. Let's talk about gross margins really quickly. there's irrefutable evidence that gross margins are overstated by 640 basis points. Why? The company does not include outbound shipping costs in that line. They bury that in SG&A. That's out of conformance with every other company in industry. They should know better. Why are they doing that? Why? Because they only have two positive metrics to sell to Wall Street: revenues and gross profits. So if you normalize the gross profit, you'll see this company's valued at 75 times, putting it way beyond Meat's valuation or anything else we can find in the public space.
Ben, I should mention, by the way, we reached out to Oatly. We have not yet heard back in terms of their response to some of these allegations. But I should mention that according to data from S3 Partners, only 1% of this company's float is shorted. So before at least you came out with this, there weren't a lot of other folks who were shorting this stock. So when you go about coming out with something like this, yes, we're seeing the reaction today, but do you think that for you to be right, the stock has to keep going down, presumably? So I just wonder where do you go from here? What happens now?
Well, I think the company has to respond. They have to say something. They've been dead silent since they came public. During this time period, we've done extensive amount of channel checks. We've gone into stores. We've taken photographs, which we put in our report. We've taken snapshots of their online presence on Amazon, on Target, on Walmart, on Albertsons, on Kroger, all the leading supermarkets in America. It's very obvious to us that they are losing market share and that prices are coming down, and players like Chobani are heavily discounting yogurt and milk to gain share. I mean, if you can't find Oatly on the shelves, competitors are seizing and wholesalers are stocking other products. So Oatly has a huge ladder to climb here. Now, the other factor is the commodity costs. I mean, what boggles my mind is that in their prospectus, they say nothing about commodity risk. Oats and rapeseed oil are enormous inputs into producing oat milk. And look what's happened with inflation. Inflation is running incredibly high. Oat prices are up over 30% year to date and have risen substantially since the IPO. So we think, Wall Street's estimates here for earnings are way too high. They're going to have to come down. Sales estimates are going to have to come down, and the company's going to sorely miss estimates. And with the high valuation, there's a lot of downside risk here.
And speaking of that downside risk, you mentioned in the report in the intermediate downside risk, you see 30 to 70% intermediate here. It's a lot to digest here. You're talking about the barriers to entry, your concerns around financials, but you also raise a lot of issues around ESG. Why do you see ESG here as a major risk?
Well, that's a great question, Julie. I mean, a lot of investors have bought into the narrative that oat milk is just better for the environment. And yes, there are certain aspects that it is better. But one thing that the company doesn't point to, and they purposely omitted from their investor presentation, is the water usage. I mean, it's incredibly water intensive to make oats. And in addition to that, it produces enormous amount of harmful byproducts. I mean, during our FOIA, we dug up that the lab tests at their New Jersey plant included dangerously high amounts of wastewater, and that has to be dealt with. So that's one aspect. The other is the transportation. Their own internal report, which we found, says that a third of the climate impact relates to distributing the inputs and the products. Well, then why did they locate in Millville, New Jersey, their production facility, when they're sourcing oats 3,000 miles away in Western Canada? It makes no sense. Likewise, they just announced they're going to open a plant in Singapore, and they're going to ship the oats from Sweden to Singapore. Now, this goes 100% against the advice they got and the best practices one would expect them to produce right near their oat sources. So, we think investors need to really think about what is the company saying and what they're doing, and we find a huge gap between the two.
Ben, thanks for coming on and making your case here. Again, we have not yet heard from Oatly, but we will update our viewers when we do. Ben Axler of Spruce Point Capital Management, he's the founder and CIO, and our Julia LaRoche. Thanks to you both.